Hey everybody, welcome back to the Mama Freak channel, and we're seeing some interesting dynamics when it comes to cryptocurrency and the crypto space. What we're hearing right now is a lot of people saying altcoin season is on, altcoin season is on, and some people are saying we've had two Bitcoin price fake outs. Will the third one be the lucky charm? So what that means essentially, in the past couple of months, we've had Bitcoin spike up, make the market think there's a bullish trend, and then it goes right back down, and that happened twice, at least in the past few months this year. So this time we've got another Bitcoin spike, which has eventually, because Bitcoin is now $44,466, up from its low, which was about $30 something, below $35,000, and of course consequently that has led into the cascading effect of liquidity flowing back into other cryptocurrencies. We can see Ethereum at $3,143. The stable coins Tether are below $1, so it's 99 cents. That's extremely bullish. It just means the money's flowing from the stable coins back into the cryptocurrencies. Of course, guys, you know the best standard, the best way to sort of succeed, give yourself an advantage in this market, is to be greedy when other people are fearful, and then be fearful when other people are greedy. So when these markets, the NFTs, coins, and everything happening in this space, when it's down, when it's going down, when people are fearful and hearing all the bad news, that's the time to get in. And so yeah, we were at that step. The markets are trying to pick up. There's a lot of positive news. So if you think you want to speculate on a market run-up, you can do that. But you have to obviously do your own research and be very careful, because we can easily see another fake out. Otherwise, it's nice to see what's happening in the crypto space right now, especially with the altcoins. Now, one thing I want to talk about before we move into today's video, it's Bitcoin. We're seeing a dynamic. That dynamic changes with the altcoins. The altcoins, because we're seeing inflation with the US dollar. So let me give an example of Terra. Terra is an altcoin built on the Cosmos consensus mechanism, of which they've announced. Look at this announcement. Terra has officially bought $1 billion of Bitcoin to back their USD stablecoin. With the Bitcoin standard, they will continue buying billions more in the coming I think masses. So what that's alluding to is that we have this cooperation now with altcoins, with pretty much the global reserve currency, at least in the crypto space, which is Bitcoin. So when in DeFi, those that have done DeFi, to get a loan from decentralized finance, you need to over collateralize your loan. But I think with such announcements, Terra Luna buying up so much Bitcoin, and this is the reason, a new proposal for Jump is now posted on Agora, outlining how the Terra organization or foundation may deploy its Bitcoin reserve on chain in a reserve model exogenous to the Terra protocol mechanics, depending on the USD peg amid volatile downward pressure. So of course, one of the biggest stablecoins right now, the biggest stablecoin used to be this one, which is DAI, but now the biggest stablecoin is Terra, is the UST Terra coin, which is the stable coin, which is a 1-to-1 ratio of the US dollar coin, which is really taking DAI afar. Like, DAI used to be the decentralized stable coin of choice, which is built on the Ethereum network, but now Terra, with its UST stable coin, has taken over DAI so much, and now we're seeing them buying $1 billion in Bitcoin to act as a reserve currency for their stablecoins that are being minted. Just in case of these price movements, they need to be able to back their stablecoin with actual collateral, and they of course, these are multi-collaterally backed coins or infrastructures. So of course they have to buy Bitcoin, you have to buy other tokens as well that are establishing themselves in a solid manner, or that have a solid foundation in the crypto space, to have something solid, multi-collateral, backing up their crypto assets. Not to mention also the Luna tokens that they have, that are also acting as extra collateral to do that, as they're building a reputation. Their native token, which is the Luna token, Terra Luna token, which is $91 now, this is amazing, also acts as their sort of collateral, as they're backing up their stablecoin, and also other tokens and other infrastructure as well. And that's what we call a multi-collateral sort of backing. So you don't have just one asset backing your asset, your minted asset. You have multiple assets backing this stable coin that's being minted, and that's the in detail, that's the sort of brief detail, that's what Terra Luna does. So the point of this video is to show you how we're seeing a continued connection between the legacy cryptocurrencies, the new cryptocurrencies, the legacy infrastructure with cryptocurrencies as well. And you're seeing also a dynamic within stocks and cryptocurrencies as people are deciding to choose which is the best thing to get into. Now guys, that is Terra Luna, but it's not just specifically about that, but it's to show you that we're seeing cooperation between Bitcoin, Ethereum, and other ecosystems. With Ethereum, it's scaling it. With Bitcoin, it's using it as collateral and using it as a DeFi or a liquidity on your platform. You create a Bitcoin peg and use it on your DeFi platform as well. So going into layer 2 solutions, we know Polygonmatic, one of the biggest layer 2 solutions on that's trying to scale the Ethereum network. There's Loopring, which is another one. So Loopring, the LRC token, its price surges by 50% after GameStop. Those that know about GameStop, the whole GameStop saga, GameStop NFT marketplace integration. So steady ecosystem growth and GameStop's announcement that Loopring will underpin its NFT marketplace resulted in a double-digit gain for the LRC price. So layer 2 solutions, we're seeing GameStop wanting to really announcing that they're going to use Loopring to implement their scalable or their new NFT solution, which I guess would be they would be bought in Ethereum, mostly their NFTs, or that will be preferred currency for transaction. But since it's being scaled by Loopring, it will be transaction fees won't be a problem. That's the whole point of layer 2 scaling solutions. You kind of stay within the realm of the novel blockchain, but you scale the finality is on the novel blockchain, but all the activity happens on the scaling blockchain. So it reduces the amount of data that has to be used on the main blockchain. That is the whole point of layer 2 scaling solutions. Sometimes it can get a bit convoluted, but in brief, it's basically to help the other blockchain scale to allow more throughput, more users, more transactions, and more data moving across that blockchain. So we're seeing that dynamic change in the crypto space, and we're seeing a lot of things going on with the integration. We're seeing a lot of interoperability standard with the Cosmos standard basically being interoperable with the Ethereum ecosystem and with the Binance ecosystem, with Crypto.com, with all other major cryptocurrency ecosystems that are building bridges. We're going to see these bridges eventually connect in all kinds of ways, through liquidity, through use case, through NFTs, play to earn, and all these concepts through decentralized finance. These things are going to act as incentive models for this whole system to act as one system, leveraging an advantage from another, and another using what they have to leverage an advantage from another. That cooperation is going to lead to the growth in this crypto space. All right, guys, I hope you learned something. I hope you got the point I was trying to make today, and be careful out there in the crypto space, and I hope you make it. See you guys next time.